Hey guys, Mike here. So, oh boy, some more big swings in the market today, and oh my goodness, did you see the Chinese stocks? Oh Lord, we're gonna get into that one. And trust me, we're gonna get into why those stocks dropped like they did, because they fell off a cliff. And understand, the second largest economy ain't the only one that's got problems. You understand me? And I mean, check this right here. I sent this out to the members last night and put it in the Discord and Patreon. I said, oh look, they released the GDP, and this was at 10 o'clock last night because I have no life, I guess. And so they released the GDP at 3.9%, beating 3.4%, but of course well below what they're supposed to come in at. It was like 5% for the year. And of course the index of Hong Kong was falling off a cliff, tech was falling off a cliff, and then today, good Lord, look at that right there. Woo! Between 12 to 15%. I mean, they were getting crushed, and there's many reasons for this. One is the Chinese Communist Party over the last week basically kicked out all the reformists. They're taking more control. But then economically, I found this right here. Currently, 1 in 5 of Chinese urban youth is unemployed due to the zero COVID policy, basically, and tightening of the private sector because they're crushing the companies over there. And obviously they have a demographic problem coming up here, or is happening now, because they had the one-child policy for years going on. I've even heard, I don't know if it's true, like there's like a generation of guys that basically don't have any female mates because there was just a whole bunch of guys born at one time versus the female babies, and so who are they gonna marry and stuff, right? And have kids with. So that's kind of a problem, right? And then you come over to GDP, and so obviously the target's 5.5%, and month over month, and they like 0.4%. And so they're supposedly basically going to grow their economy by 2.8% this year, which is for them is an absolute disaster. You can see what Tesla did today. They already announced they're cutting prices in China because of concern over softening demand, right? And so that's no surprise there. But understand, they are not alone, all right? We got some economic data that came out today too, and we'll get a whole lot more coming out this week. And you can see our economy ain't exactly pumping on all cylinders. The S&P Global U.S. Manufacturing PMI fell to 49.9 in October of 2022 from 52 in September, well below the market forecast of 51, and marking the sector's first contraction since June of 2020. New orders shrank, signaling a renewed decline in demand, with manufacturing highlights with the impact of high inflation and stock building from earlier in the year, which we've already heard that before, right? The rally for the dollar also pressured export demand to decline at the quickest pace since May of 2020. Still, manufacturing output was seen marginally higher, pressuring backlogs of work to fall for the first time in over 2 years. Meanwhile, employment grew at a slower pace. On the price front, input costs accelerated at a 4-month period of eased inflation, largely due to material shortages and higher wage bills. Looking forward to price pressures and expectations of higher interest rates drove the degree of confidence to be close to the survey lows. And if you need a visual right here, you can see that right there, that low point, that is October. If you go back to April of 2022, man, that is quite a drop we have been on, okay? And so that does not show superior strength in our economy at all. And again, for you members, if you do not see this video, this is the indicator, the leading indicator I'm talking about, when you can see when the economy is slowing well before the market drops, and then it'll turn up before the market actually, the stock market that is, actually bottoms. And so I'll show you that in the videos. Make sure you go watch that, okay? And if you want to sign up for that membership, I put it in Patreon and Discord, $7.99 a month, cheaper than a McDonald's combo, guys. And let me fit this data in here, because I like to keep you guys updated on delinquencies, because this is what you'll see happen well before you see the economy fall off a cliff. This is credit card delinquencies, not high. You look at the top chart, 1.8%. So it's really not high. But you look at the bottom, though, and you see the increase that took place. That increase, you have to go all the way back to 2007 and 8 and 9 to actually see increases like that, right? Because if you compare it to 2010 forward, you don't see pops like that. But you see every single month that bar on the right is going up, right? And so you're starting to see pressure put on consumers, and a lot of people running credit cards up they cannot afford. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And so that leads us into the S&P. What happened today? Another huge swing. So chalk it up to that chart I showed you last week as far as competing with 01 and 08 with these 1% swings. And what we're looking forward to tomorrow and the next day, because it's going to be huge. And if you look at the S&P, you can see right here, obviously continue to move up, got right up to that 50 moving average on the daily right there. You got the 100 above that, the 200 above that. The 200 actually coincides with that big gap we made plus the golden pocket on the Fibonacci levels. So that's going to be an interesting market to see what happens there. You can see the 5 over the 20 period moving average and the RSI, which I like. Remember, it moved over 50, so bullish. And you can see, if we go back, why am I looking at that so much? It's because of this right here. And you can see, boom, right there. As soon as it crossed over the 50, you can see it actually started moving in June. This is when they talk about this pivot thing. That's what's happening in June, where they're going to maybe stop raising rates, which is total BS, by the way. And it traded sideways, popped over 50, and then took off, right? You can see it right there. 5 came over 20 period moving average. And look what it does in the moving averages. It comes up, retests, bounces, moves up, retests, bounces, and then just blew right through the 200 until we got to the very edge of the channel and then sold off like nobody's business, right? Until we hit the new June lows there. And what's going to continue this rally, if it continues at all, it's going to be earnings, right? So let's play a little game I talked about in the beginning. You got UPS, GM, Coca-Cola. Now, do you think UPS goes up or down? And go ahead and hit that in the comments. GM, up or down, hit in the comments, and then Coca-Cola. The rest of them, I don't think a lot of people are going to know. Feel free to guess if you want to. I'm going to say UPS, I'm going to say goes down, Coca-Cola goes up, GM goes down. That's just, I'm just going to guess that out. I haven't done any research on that, but that's my guess. Big ones, Microsoft, Alphabet, let's say Visa, and Chipotle, and Texas Instruments. So 5 of them. I'm going to say Microsoft goes up, Google goes down, Visa goes up, Chipotle goes up, Texas Instruments, oh, it's a tough one. I think they always beat earnings. I can't remember, though. But I'm going to go with goes up. How about that? We'll go with that. And I meant to tell you this story yesterday. I totally forgot to say it. But what I was talking about when it comes to this economy, right? My wife and I, we needed a new couch because we adopted another dog. So we got 2 dogs, and God, they just tore the leather couch to pieces. So we've had it for a while. So, but we hadn't bought any furniture since pre-pandemic, right? So we ain't been a while. So we went out there, and of course, furniture is really expensive right now. And we walk into this furniture store, and I mean, it is packed out. There has to be 30 to 40 salesmen at least that I could see. God knows how many were behind the walls, but and I mean, everywhere I look, it's just people shopping this furniture. And this furniture is higher than I can remember it ever being, right? But it's busy, right? Same when I told you at the car lots I saw when we drove down this road, and there's more cars than I've ever seen in my life, and they're just packed out. It's amazing, right? And so, like I said, I'm sure there's certain pockets of the country hurting, but around North Florida, you know, it seems, I'm sure South Florida is the same way. It's just business as usual. I mean, it's amazing to see it. And I'm like, wow, I mean, let me know in the comments, or let us know in the comments. Is your area that way? Because I go to restaurants, they still can't find enough employees. Still got sections, you know, basically taped off or waiting to sit down, even though there's tables open because they don't have enough employees. And the ones that are open are all filled, right? And there's a waiting list. And so, again, and that's what I'm saying when people say, man, we're in a terrible economy. I'm like, yeah, certain parts. Absolutely, but when it comes to the services, man, it's like, wow. And then it comes, I mean, I was surprised to see the furniture store was that busy. I really was. It was shocking, but there we go, right? I mean, cars are higher than they've ever been, furniture's higher than they've ever been, and people are still buying it. And so, you know, maybe that's got something to do with the credit cards defaults and everything else. I don't know. But, you know, looking at economic data, tomorrow it's all about the housing, guys. And so, you know, we're going to come out there with the Case-Shiller home price year over year for August. And then we're going to go into the house price index month over month, year over year. So we're going to find out a lot about the housing industry tomorrow. Let me know in the comments what you think. I obviously think the number's going to look terrible. Because who in the hell is buying houses at these interest rates, at these prices? I'm sure there's people out there doing it, but it can't be in droves. There's no way that many people are qualifying for those houses, right? And so, you know, we'll get to see, because what I keep reading is, you know, people are, especially even our area, they're having to mark them down now, right? There actually is the houses that are sitting on the market before, they were gone. Some of them didn't even have to get a sign out in front for sale, right? And now they're having to mark down. I'm looking them up every time I walk by a neighborhood or I see something, I'm going to visit somebody, because I have this channel, so I'm a weird dude, right? I'm always looking out for this stuff. because I want to be able to tell you guys about it. And I look it up and say, oh, no, it's been on the market for 30 days. They've marked it down twice already, you know, because they're trying to get out from under it. Because they knew once summer ended, it was going to be even tougher to sell their homes because nobody wants to move when your kids are in school unless you have to, right? And then when, of course, the real holidays, November and December come, who in the world wants to move during that time frame? So, you know, it's going to be interesting to see and let us know what's going on in your area. Again, hit me down there. Let me know what you think about these earnings. And you know, I haven't done any research to back up mine. I'm just looking at it going, let's see, that one's ad services. Those aren't doing good right now. This one's this cars. I don't know. I'm not seeing that one. But the good thing is when you see what GM does, that's most likely what you're going to see what Ford does because they report on Wednesday, I think, maybe Thursday. So anyway, I hope you guys something out of it, guys. Hit the like and subscribe button and sign up for that membership if you want to. A lot of you guys are doing that, and I appreciate it. Just let me know if there's anything I can do for you, and I certainly will, okay? So have a good one, and I'll see you tomorrow.